Yo, 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 what's going on, ladies and gentlemen? I hope everyone is doing well. It's Friday, and we are going to talk a little bit about the up-and-coming event of the Super Bowl, the advertisements in cryptocurrency, and how that's going to affect price action. First things first, what we need to establish is the following. We know that market makers do this. When price is rising, okay, people are buying. And in order for people to buy, the market maker has to sell the contract opposite, which is a sell. Why? Because that's how you balance out the free and the ebb and flow of the marketplace. All right. So it's important that you keep that in your mind. Every time you come to the charts, ladies and gentlemen, you must always keep in the back of your mind that when price is rising, sales are being given. Because you can only buy if someone sells, you can only sell if someone buys. That someone is Mr. Market Maker. He is the liquidity provider. Welcome to Traders Reality, ladies and gentlemen. My name is Tino, and if you are new to the channel, guys, be sure to like and subscribe. Get all that YouTube algorithm housekeeping out of the way. So let's roll with the flavor and have a conversation about what could happen next with Bitcoin. Cool. So, last night, Bitcoin decides to take this move to the downside and comes back down into this range right here, which takes out last week's high. Now, it's doing a really good job of holding this area, okay? Now, what we've got to be aware of is the following. We understand that when markets are rising or the price is moving higher, we can understand that the market maker is building short. So we need to start off with the whole and the half numbers, the phenomena of where people believe price of Bitcoin should be at, or how people place orders at impressionable points in the chart. So 44,000 is a whole number. Now, you may have seen in the channel, go back a few streams, you will understand when we talk about the whole and half numbers, we are understanding that the market maker builds his shorts above those zones and he builds his longs below those zones. And the reason he does that is because he is filling orders lower by trapping traders to go short if he's going to build longs, and up here he has positions already set so that when he is able to exploit the liquidity from the downside to move all the way back up, exploit the retail traders liquidation points and their margins that are placed in the chart as we go up. This is for the shorts, okay? And as he hits those previous liquidation points, he's also opening more shorts on the way back up. So he has to make sure that there is a continuous flow of liquidity so that the markets are not disrupted. Now, if you are new to the channel and what I'm talking about is blowing you over and you're thinking, hold on, I have no idea what this guy's talking about, let me just break it to you down like this. If you were to walk into a shop and the shop is completely empty, okay, and you walk up to the guy at the counter and say to him, I'd like to buy everything in this shop. He will turn around to you and you'll say, sorry, bro, I don't have anything to sell to you. And you're there adamant. You want to buy something. And he's like, bro, I can't sell anything to you. There is no market. Okay. Likewise, if you walk into a shop with an item that you want to sell and the guy on the counter says, I can't buy it from you, bro. And you're like, just buy it, man. Come on. I'm selling it to you. Come on, just buy it. He'll be like, I can't because I don't have the money to buy it off you. You can sell it to me all you want and it can be an amazing item, but I haven't got the liquidity to give to you. So there's no fair exchange. That's exactly what's happening in the marketplace, ladies and gentlemen. This is the basis of why price rises and why it falls, and why price stops at one point and why it reverses from the other. Okay. Now, if you do attend the streams, you'll be diving into more detail about it. So be sure to make your way to those streams as and when they are aired on YouTube. Okay. So let's just try and take what's going on in the charts and correlate it over to the idea of the Super Bowl. Let's try and understand the basis of price action and what we can expect moving forward. So Bitcoin, based on the principle of the pattern that we talk about all the time, we started at the beginning of the week, the W formation, okay? Price comes up, it retraces, and this is where we are right now, okay? You can see we've got the pattern right here, and they move up and they come back down into that zone. Now, because we've got the Super Bowl coming up, the impression of the Super Bowl is it's going to be appealing to a wider audience. Now, if we roll over to a little article that was written on CBS, I've just pulled this up just randomly, just to take key aspects from this, just to put the narrative of what I'm trying to say to you guys into your mind so you're aware of what may potentially happen, okay? FTX and Crypto.com are one of the main guys in the cryptocurrency related companies that are looking to take advertising spots in the February 13th game. All right. So loads of money is being pushed into the Super Bowl to appeal to many people across the board. Now, we've got ages between 18 and 49. All right. Now, cryptocurrency is something of the younger generation. Appealing to the older generation, all right, is somewhere where they might think it's not going to work. Now, the Super Bowl is something that they're going to be able to, at the entry level, induce people to believe that cryptocurrency is a good thing. Okay. And they're going to appeal to this age group. All right. Now, with that being said, all right, they're talking about, well, it may not go according to plan. You know, some people have had adverts regarding shoes that have, you know, failed during the Super Bowl. Where was it? It said it right here. Yeah, someone talking about a feet ad in 99. I mean, that was then. Let's look at where we are right now. You know, it was deemed as the ad from hell. You get what I'm saying? So the idea is there is a lot of, you know, tension building up until the actual Super Bowl, because the ads, even though they're spending loads of money, does it mean that it's going to succeed? And the result of that, okay, is going to roll over the next few days. It's either going to happen at the end of the game, it's going to happen during the game. I won't be surprised after the crypto ads, okay, they put on other ads and people may lose their attention to those ads and then start going on to their apps and start downloading information, downloading crypto.com, FTX, whatever, okay? So if there is a gap in between the Super Bowl whilst the ads are playing, all right, after the crypto ads are being pushed out, we may see some price action during that time, okay? But in my opinion, I believe that it's going to roll over into the week, okay? So people are going to go home after the Super Bowl, whether they're happy or whether they're sad, okay? They're going to, you know, reflect their interest in crypto later on, all right? Now, that doesn't mean that the market isn't going to be moving, because the market could be moving up and down, up and down. Now, we've got to be aware that this could be the case up until the Super Bowl, because everyone is in anticipation that this is going to be a market mover. All right. So with that being said, let's have a look at something that might actually add some insight into believing as to whether or not people are going to get involved into crypto at that point in time. Just look at the glass node. The leverage ratio across all exchanges is dropping. So it's like no one's really, you know, borrowing money to trade Bitcoin. Okay, that's on futures. Now, let's be honest. The guys that are going to be getting into crypto from the Super Bowl are simply going to be the guys who go and buy and sell crypto. That is it. All right. Technically, they are deemed as traders because they are entering at one price point with the anticipation to close it at a later point. They ain't in the game of leverage yet. Okay. However, leverage itself may react to people's interest in cryptocurrency. So that's when the traders come in and start to speculate on the potential volatility that may come into the charts, which leads us into the understanding of what price could do next. Now, over the last couple of days, we've had Bitcoin holding this range after this nice little run up to the upside. Okay, you can see these two important areas in the chart where they had spiked the buys and hit the longs and come straight back down and hit the liquidation points for that. You need evidence of that? Just look at the High Block Capital itself. This is a platform that allows you to explore the leverages that are being placed and orders being placed in Binance. You can have BitMEX and Bybit, I believe. And you can try and work out if price is going to make its way towards those liquidation points, and are they going to go to the shorts or the longs. So in the visible chart right here, you can see, now we've been speaking about this in the streams for quite some time. We've been anticipating them to come down and hit some of the liquidity to the downside. All right. They've been absorbing some of those long liquidations. People were like, you know what? It can go and go and go. It's not going to come back to those zones. And you can see they've made 2 attempts at those areas. Now, the purple areas is the retail traders who are going long on 25x margin. So that means that they are using more of their own capital and less of the leverage, all right, to trade Bitcoin. Okay. Now, the 100x traders are the guys who use minimal cash and use as much leverage as possible. So they're borrowing more money from the exchanges to have the luxury of being able to get into a trade with Bitcoin in favor to the upside or to the downside. So we can see there have been a lot of shorts being opened in this area, which are the red dots, and you can see the market just spike price up to the upside, which was shown from yesterday's price action in this move to the upside there. All right. So with that being said, you can see that they had trapped the longs and the shorts, and they made a run for the liquidity to the downside, which took us all the way down towards the 42,706 zone. And you can see now that there are not many longs being put into the charts. Right now, there's $6.5 billion worth of longs in the range. Only at the start of this week, there was roughly about 37 billion. Okay. So if we look back here, that was in and around it wasn't 15, it was about 37 billion when we looked at this platform. I think it was on Tuesday or Sunday night. It was about 37 billion, all right, of liquidation points for longs. Yeah. So looking at this chart, we can see that we are in essence at a median between shorts and longs. So these are the short liquidations, these are the long liquidations, and we're now waiting to see if Bitcoin is going to make a run up. All right. How can we justify it? Well, let's look at the range that it's just come and bounced away from, the 42,700 zone. Now, in yesterday's New York stream, we had marked off the following pattern. All right. And you can see that we had the M formation, and we needed to understand that if Bitcoin was going to actually move higher, it would probably come back down towards this zone right here and potentially this zone, all right, and trigger some interesting behavior. Now, this area right here was the 42,727 zone, and it was the last area in the chart where the market maker had trapped the retail traders to go short because he uses their liquidity to go long. Why? Because when you sell, you can't sell if no one is buying. The market maker buys his longs in these zones, and then he marks price up with aggression to take out all the guys who had went short on the move to the downside. Because the narrative was simple. Everyone was expecting Bitcoin to drop. Okay, and they were trying to catch the shorts, which is why they kept spiking price up and down, and making the retail trader pay the price. Okay, now looking at price action now, there is one key area in the chart which will prove as to whether or not Bitcoin is going to hold. The psychological ranges. All right, if Bitcoin from now up until the new psychological range is formed, all right, which is Saturday night, if they can hold price, so if they actually bring price down lower from now until Saturday, that would be a very, very strong indication that something's going to change, and it's either favoring the higher movement or they're getting ready to explode to the downside and take back this imbalance. Ladies and gentlemen, I'm not going to say to you Bitcoin's going to go up and then stay in that bias. I'm not going to say it's going to go to the downside and stay in that bias. The nature of this channel is to help you be aware of what's going on before you come to the decision as to whether or not you place a trade and speculate the idea of price rising or falling. Okay, if you watched last night's stream, ladies and gentlemen, we were talking about the algorithm at play. And if you go over to this document here, which you'll find in last night's stream, it's in the description. You can download it and read it for yourselves. Okay, so the principle says about the market making algorithms, they follow a basic formula where time, and they place new buy orders and they place new sell orders, and they ladder them in such a formation so that any sudden price fluctuations that appear causes a proportionally large volume of executions. Okay, so in aspects, what we're saying is where you see price exploding up and then coming down, those are orders being processed by the market maker by exploiting the retail traders' positions. Okay, now in order for us to understand if they are likely to drop lower, we're going to have to understand if they are spending more time in a particular zone in anticipation to release the liquidity to the downside, or try and make the big move up to trap traders. Because look, this move yesterday triggered a lot of people to go short. At the same token, they reversed it back up because they needed to absorb the liquidity. All right, because the market maker had gone long in this area, because below these areas here, he's placing orders because he has to make... Shit, I've just spilt my coffee. What a sad day. Okay, sorry about that, guys. Yeah, that was one of the greatest classical boomer moments that could happen in a video. I don't usually have many boomer moments, but I just knocked over a nice coffee that I've been bursting to drink, and it just ruined the ebb and flow. Okay? Wow. That's a good luck thing, apparently. If you spill coffee, it seems it's a good luck thing. But the unfortunate thing is, I've got coffee all over me. My laptop's nearly... Okay, we're not going to talk about that laptop anyway because it's on its way out. So, back to the channel, back to the conversation at hand. The narrative, what I'm trying to get across to you guys is this, all right? We are in essence trying to establish if the market is looking to favor higher prices because of the zones of liquidity up here, or is he looking to favor lower prices because of the zones of liquidity down here? Now, the hybrid system stipulates that we naturally come back to previous zones in the chart, which is the liquidity down here, all right? Now, because of what's going on with the future, with the Super Bowl, my advice, or should I say, my opinion, trying to trade over the weekend whilst this thing is happening, all right, with the Super Bowl, just be careful. It's hard enough that the US right now could actually hike the rates and, you know, change up the base points, which could have an impact on the way markets trade from now until they decide to do it. They may even decide to do it in the New York session. It's literally at any moment now they could do it. And this is probably why you see price right now is stalling and not doing much, which is a good representation of Bitcoin, in essence, following the equities, which will be pretty interesting to see if the equities themselves either gap down, simply because of the speculation that they are looking at hiking the rates, all right? Retail traders are going to be reflecting their fear in the charts. Just look at gold. Gold is doing well by moving higher. They're holding this range, all right? So traders may be turning to gold for a safer investment because they're uncertain about what's going to be discussed over now until the New York session happens, all right? They may even do it over at the weekend. You just don't know, guys. They are going to trick people this weekend. So please, what I say to you is this. Let the move happen. All right? Let it happen. Why? And then you'll say to me, yeah, but Tino, had I have not listened to what you said, and I waited, if I didn't wait, I would have been able to get inside my entry and I would have been able to ride the move to the upside and take advantage of it. You cost me money. Come on, bro. If you were so sure it was going to happen, you would open a trade. You'd put the house down, bro, wouldn't you? You would go all in because you knew that that was going to happen. You are in the game of speculation. You will never know what's going to happen. We can sound as smart as we want, ladies and gentlemen, when we're trying to understand the basis of uncertainty. We just don't know. All right? No one knows. I don't know. I am not advocating that I know where Bitcoin's going to go. But what I do know is I'm understanding the behavior of the market maker. If you go and watch yesterday's stream in the New York session, I was saying, is this a surprise drop out of the blue or is it a stop hunt low rise? Okay, look, the title of the video, surprise drop or stop hunt rise. So I've already got it in my mind where I'm believing or what I'm believing is happening, and my justification for the stop hunt rise was on the basis that Bitcoin was dropping, everything was rising. Why was Bitcoin dropping against the same things that it rises with? The equities were rising, and Bitcoin's coefficient with the equities is positive, so it rises at the same time as Bitcoin and as the equities. So what was going on? So in my head, I was like, okay, they're trying to build more longs at lower prices because they've contained the range. Okay, I'm aware of what could happen. Let's see how it plays out. We have the strategy of the hybrid. When you see a big red vector candle like this, you wait for the confirmation candle to confirm it's going to follow through. Look what happens. The green vector candle opens, it spikes down lower, solidifies the intention to the retail trader that it's going to drop, and then it reverses back up. We were waiting for something, and it was the sheer patience and the understanding that this was not a common thing. This candle was not a common thing at that time, because we spoke about it last night in the stream. We pulled up the yields, we pulled up the equities, the S&P, and then we pulled up dollar yen, we pulled up gold. Everything was rising except Bitcoin. So that was a clue right there. Okay? So now coming into the charts, guys, just wait for it to play out. If Bitcoin's going to go to 100K, all right? By principle of the cycle, we expect Bitcoin to move up. All right? If it moves up to like 52, okay, where's your 100K? Because before it gets, and once it gets to 52 by principle, what if it retraces? And then when it retraces, what if it then decides to stabilize for a little bit and then shift out? Where do you want to get in? Do you want to get in on the hope that it's going to do it? Yeah? Or do you want to get in where they have established the intention, they've retraced price back down, they have held the range, and momentum has turned the moving averages to favor higher prices, and you are improving your chances of a trade playing out by simply observing their behavior in this area? So in other words, using the 43,400 zone and the 56K range itself, because if you look left, it's the previous pool of liquidity, okay? You can use this zone as a means of justifying your entry. Why? Because if it comes away from this zone in this range right here and comes away, and you have a position, you're going to be paying to determine if this is an area they're going to move higher from. And if they move higher from it with conviction and then repeat the same process by retracing down and moving higher, then you're in a position to understand that, yeah, they do favor higher prices because the Super Bowl seems to have been a successful play. People are adopting crypto. People are buying crypto. Everyone's rushing to get crypto because of the Super Bowl. Okay? And then you have other bits of news that could hinder anything as well, like the hiking of rates. All right? So what I'm trying to say to you guys is I'm trying to help you label out all of the options possible. And then when you come to an understanding of where you think price is going to go, the only way you're going to know you are right is the feedback that is generated from the live trade that you have on. In other words, how much money are you prepared to pay to accept that you are wrong and in the wrong direction? And how much money could you potentially earn? And how much will you pay yourself when your conviction has played out correctly? Yeah? Spend less time paying on being wrong and spend more time on understanding when to get out once you've realized the profit. Why? Because guess what? If you made a move to the upside here, okay, and you got in this area, for example, and then you paid yourself at this point, if the move shows truth, when it retraces and then moves back up again, you'll be getting in this area here because you'll be following what we understand to be the pattern. And if the basis of them holding this range right here is preparation for them to break out to the upside, then any retrace back down will show the same interest to keep price back up. Why? Because the market maker, go back to the article, places new buy orders at X price, at Y price, and sell orders at X price. So when price is rising, he's placing sell orders. Why? Because he's got the flow of people coming in to buy. When price is dropping, he's placing sell orders, okay? He's placing buy orders because people are coming in with the intention to sell. And it's when the market maker's intention to mark down the shorts, to trap them so that he can reverse and release the liquidity he has built from longs to the downside. Once that changes, he will be then activating all the sell orders that he's been placing to lure in the retail trader to continue buying so he can get his orders filled at higher prices, aka the shorts. Do you see what I'm saying? Why, to simply believe someone that says it's going to go to 100K, there is so much more that has to happen before it can get to that. Because a bias is so much more easier for someone to accept because they don't want to have to go through the understanding of how the game works. Because people want a quick fix. Shortcuts in trading don't exist. They exist for the people who don't want to commit to understanding how the game works. Because if you spend a little bit of time understanding how it works, you're going to spend a lot more time in the game avoiding the tricks of the market maker. Okay? Mad love and respect to every single one of you people. Have yourselves a wonderful Friday. Just be careful with your trading. Don't risk too much. Preserve your capital because guess what, guys? The result of the Super Bowl is going to start next week. All right? In other words, there will always be a market. Have yourselves a wonderful day, guys. I won't be streaming today unless Bitcoin goes below the 38k range. If it goes below there, I'll start streaming, but it's unlikely, okay? Mad love and respect to every single one of you people. Have a great day. Peace.